Hey guys, my name is Courtney Epps. I am originally from a small town called Aner, South Carolina, which is close to Myrtle Beach. And so I have been an accountant for the last 19 years. And what I specialize in is just freeing up money for people. I like to tell people that I'm a tax strategist. I went to Coastal Carolina University in Myrtle Beach, South Carolina, or Conway, South Carolina. I graduated with a 5-year accounting degree. I have been an accountant for the last 19 years. I own a full-service accounting firm here in Greenville, South Carolina, and we have about 17 employees now. So we have literally grown from about $7,500 a month a little over 2.5 years ago to $250,000 a month just last month. One of the things I think is very crucial for you guys to understand is that 46% of Americans don't have an extra $400 to their name, and that was before the coronavirus hit. And 69% of Americans don't have an extra $1,000 to their name. So, you know, what this has been and what this is doing is being a real eye-opener for people to say, something has to change. One of the key components of what I do is teach you how there are two tax systems in America. And there is a tax system that's literally created to steal your wealth away. And that tax system is called the W-2 salaried employee tax system. And then there is another tax system, the second tax system, which was created to provide you wealth. And that system is for business owners. As a business owner, we create economy. We go out and sell, we make money, we generate money into the economy, and then we hire employees typically. And so what ends up happening is that we get massive tax deductions to do that. And so then it trickles down to the employee. So someone has to pay taxes. And if we were stuck as business owners paying taxes and paying for everything that it takes to run a business and hiring employees as well and paying for them, there would be no money left over. So no one would go out and actually build a business. It's imperative to help people because I just said 46% of Americans don't have an extra $400 to their name. We have to first teach people how they literally do have the money. They're just overpaying it in taxes. What I've found over time now is that we're able to save between $4,000 and $8,000 a year for people who just get started in the network marketing industry and attempt to earn an income. Back in 2008, when the stock market crashed, when everything, went haywire, if 75% of Americans had an extra $300 to their name, they wouldn't have lost their home. If you have people who say, I would love to get started, I just don't have the extra money. Well, here's the best part. They can actually increase their W-4 exemptions and get more money back on their paycheck. And then they can actually use that to start their own home-based business. In this stimulus package that's coming, I mean, what better way to change your life than to start a home-based business, save yourself $4,000 to $8,000 a year in taxes, and then in turn, end up, starting at something that you could take anywhere for any amount of time, do whatever you want to do. And the IRS literally says if you're just spending 3 to 5 days a week for 45 minutes a day, then you are doing what you're supposed to be doing to attempt to earn an income. The average American makes $60,000 a year. So the average household, literally, and they pay $14,000 in taxes, and their take home is $46,000. So what that means from there, okay, I make 60, I pay 14 in taxes, I bring home 46. Now I have a cost of living. And the average cost of living in America is $53,000 a year. See, guys, people don't even realize they're going to work to be in debt $7,000 a year, to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. That's why our national debt is almost $70,000 per household. That's why we're so far behind in student loan debt and credit card debt. It's because people don't realize they're actually spending more money than they're making. And they're going to work every single day. And so something has to change. And it clearly has now. So when I realized that I could take that information, I could help someone get involved in a home-based business, save them $4,000 to $8,000 a year, I knew I could change the world with that information. Starting your own business from home and, joining a network marketing company, it doesn't cost a lot of money to get started. And so, if you understand that, I can spend a little bit of money And now I can write off my cell phone. I can write off my meals. I can write off my mileage, my internet, business use of your home. All these things become tax deductible. So if I pick up the phone and I call Susan and I say, Susan, you know what? I've got something I want to share with you. If I'm in network marketing. So I get in my car, I drive to Susan. I get to ride 58 cents a mile on my car. Now, the more you use the vehicle for business purposes, the more things you can write off. So I sit down with Susan and I say, hey, Susan, I share with her what I'm doing. And Susan may decide, you know what, Courtney, I love what you're doing. I want to be a part of it. Or I may love your product. I may love your service. Or, you know, I love the business opportunity. I want to be a part of that. Or Susan may say, you know what, Courtney, I think you're going straight to hell or straight to jail. But either one, I am in no way interested. And then I'm going to look at Susan and I'm going to say, Susan, I am just trying to share with you a way that not only changed my life and helped me free up some money, $4,000 to $8,000 a year in taxes, but it's also changing my health. It's changing the way that, you know, that I get to spend time with family. Because see, here's the thing, Susan, I sat down with you and shared with you what I was doing, and I was able to write off 50% of my meal. You don't get to do that as a W-2 employee. When I got in my car and drove to you, I got to write 58 cents a mile because of that. You don't get to do that. So I sat down and ate. I'm going back home when I leave here. I get to write 58 cents a mile on the way back home. And then I get to write off my cell phone because I called you on it. I get to write off my internet because I needed it to run my business. I get to write off my laptop that's in front of me because I did a presentation with you on it, or my tablet or iPad or whatever you want to call it. And then on top of that, when I get home, I get to write off a portion of my home, a portion of my mortgage interest, my property taxes, my insurance on my house. I can actually depreciate my house. I can do all these repairs and maintenance on my home, and I can write off a percentage of that. And then guess what, Susan? I just bought a swimming pool, and I put that swimming pool in, and because I have employees who are my children who live and work on my property, and I allow them to swim in my swimming pool, that is now a tax deduction as well. So see, the difference between me and you, Susan, is that you're a W-2 employee, and I get that, and I respect that, and I'm not in any way knocking that. But I want you to understand that as a business owner, I get tax deductions that you can't even fathom. And then I hire my kids and I pay my kids to work for me. Well, I'm going to give them money anyway. I have to give them money for, you know, things like video games, or pay for them to go out to eat, or pay for them to go to events, or, you know, Carowinds, whatever. And I'm going to pay them, and then they're going to pay for those things. And guess what? That's tax deductible for me because I hired them. I can pay them $12,000 a year each, and I don't have to pay taxes on it. And so that literally, my 6 children, that's $72,000 a year I don't have to pay taxes on. They don't have to pay taxes on it either, because in this country, you don't have to pay taxes on the first $12,000 a year that you make. And so that's $28,000 in tax savings. That's money that I get to keep in my pocket that I could use towards my swimming pool. And then on top of that, Susan, guess what? Because they're my employees, I take them with me to every event that I go to. Not only are they getting the personal growth and development, but they're also getting, I get to take them with me, and I get to write that off as a tax deduction. See, I can write off the day before as a travel day, so I can go spend some time with my children on the front end. I can spend time with my children on the back end. I can take them with me to these events so they can get the personal growth and development that they need. That's all 100% tax deductible. See, you just don't get what I see. And at the end of the day, I'm going to make my money. I'm going to buy most of my needs and my wants, and I'm going to be left over with an amount of money. And then I'm going to pay taxes on that. Whereas a W-2 employee, you're going to make your money. You're going to pay taxes. You don't even get a say-so in how much money is coming out of your paycheck. And then what's left over, you may buy some of your needs and your wants. And right now, with the way the economy's going, I don't think that you're going to even have that much. So I'm in no way knocking what you're doing, but I just want you to understand that things are changing. And, you know, I get to stay at home with my kids, and I get to spend time with them. And it's very important to me to be able to do that, but I also am saving money along the way. And I had two clients that came to my office last year, and one, they were married. They did not have kids. So it would have actually been even better if they had. but one made $85,000 a year and the other made $55,000 a year. And they wanted me to let them know how much they were going to end up, what their tax liability was going to be on a pay increase that they both received of around 35 grand. So we determined that they were only going to bring home $13,000 extra of the 35 grand. So they were going to pay $23,000 extra in taxes because the increase was putting them into a higher tax bracket. So I'm like, that is crazy. And I said, while you're here, let me just figure it and see how much money you would actually have to make if one of you stayed at home, or what your true take home was. So we looked at that $85,000 and left that, and we took away the $55,000 a year. And it ended up that she was bringing home an additional $1,800 a month by making the $55,000 a year, because they were paying in $34,000 in taxes. Is that right? Yes. That sounds from 55. Sorry guys. 55 and 21, $34,000 in taxes. That was right. So I told her, I was shocked. And I said, if you would make about $1,000 a month in a home-based business, because of the tax deductions, because see, if I make $1,000 a month in a home-based business, I can write off $1,500 a month in that home-based business, if not more. So, it's not about how much money you're making, it's how much money you're keeping. So if I take that same $1,000 a month and I'm writing off deductions that go against the $1,000, I'm not paying taxes on the $1,000, but I'm also going and offsetting against this $85,000 a year that her spouse was making. So I said, if you make $1,000 a month, you would be better off than your $55,000 a year paycheck. And see, that's the biggest thing I think we need to share with people right now is that, yes, you may have lost your job. One person in the household may have lost their job, but are they really worse off? And the reason why is because when you go get a job, you not only you're paying for gas, I get that. You're paying for clothes because you got to look good while you're there. You're paying for lunches. People are going out to eat every day. And my staff does that every single day. And I will add up how much money they're spending. And it's like $25 a day between Starbucks and going out to eat for lunch and snacks. I'm like, this is crazy. So when you add up those things and then you take into account taxes, and the average American is paying 40% of every dollar they make in taxes, when you add all that up, and then because there's a second income, you're now paying higher tax, you're in a higher tax bracket on all of your income. And then let's tag in some daycare. Really. You add up daycare. I had a client last week, they're spending $39,000 a year in daycare. I don't get it, guys. They are literally one person. If one person stayed at home, it would save them almost $60,000 a year because of the child care, because of the taxes, because you have to make so much money in order to pay the child care. So, so many people are they're not understanding that. So they don't get started because they say, well, I can't make $500 or $1,000 a month. That's not going to do anything for me. The average person in America that makes $100 grand a year, they have an additional $250 a month in expendable income. That came from AIG. That was a study that they did. So, you think about it, what's currently happening is not working. So, I want people to understand you're probably better off if one of you just stayed at home and watched the kids and didn't have daycare, and you didn't have all these extra expenses. You don't have to go out, go grab food every afternoon because you're too tired when you come home from work. And then guess what, guys? You can actually spend the time and build your business the right way so that you have something to leave your family. In 19 years, I've never had a client audited by the IRS. I've had one client audited by the state. That was a hairdresser. So that being said, 75% of our clients are home-based business owners. So if that were the case and you were more likely to be audited by claiming business use your home, we would have more clients audited. So, just sheer percentages. I mean, we have way too many clients that have their own business and that are in network marketing. I would say half of our clients are in network marketing. They've never been audited, guys. So, one of the things that an article just came out recently that unless you made over $500,000 a year, it was just in January, I read it. It was directly from the IRS. Unless you made more than $500,000 a year or you were in poverty level where you were receiving earned income credit and child tax credit, you didn't have to really worry about an audit. Amazon paid $0 on $11.2 billion last year. Why did they do that? Because they're smart, because they hire tax attorneys, CPAs, and tax strategists to do nothing but find ways to save them money in taxes. I've literally just had one client that overpaid $111,000 a year as a network marketer. We went back the last 3 years. We amended her tax returns. She overpaid between payroll taxes that her accountant told her to pay herself and between her income taxes, she overpaid $111,000 a year. That's $333,000. That's a lot of money. That is a lot of money. And so, what I'm finding is that continuing education that we're taught as far as accountants go, we're not taught the things that I'm teaching you today. We are taught by government employees when we go to college. They don't teach tax strategy. There's not a single class on it. It's literally, how do you do a journal entry? How do you do bookkeeping? How do you do a tax return? That's pretty much it. So then the next step is we go into continuing education that's required every year, and we're taught by government. Government contractors are teaching us not tax strategy. They're teaching us tax laws. And what they're doing is literally scaring accountants to death into believing, well, if you do this, your client could get audited. And the underlying fact is, guys, is that this world derives on fear. Like the government is all out to just scare you to death so that you won't take the deductions that you're entitled to. And auditors get a percentage of what they can take from you. So if they can find anything, they get a percentage of that back. So you have to understand that. So, what they're going to say is, oh, well, and I've had clients that were audited, they weren't my tax returns, but I've been a part of an audit for them to help them. And, what they'll say is, oh, we're going to audit you. We audited you because you claimed your auto expenses too high or your telephone or your travel or whatever. And that's just to scare you into not doing that next year. I'm not saying that your accountant, it's not that they don't want you to know or that they're hiding something from you. I just truly believe that most accountants don't know the information that I know because they haven't sought after the information straight through the tax code, because it was clearly written for business owners and we are entitled to so much more. We just have to find that way. And, one of the things I do want to be clear on, tax strategy is the number one thing that you should spend money on or spend your time on, because taxes cost you more in your lifetime, the average American, more than food, clothing, housing, and transportation combined. So when you add up sales tax, property tax, real estate taxes, and then income taxes, and then FICA taxes, all these things add up. You're spending so much money on taxes, and that is the most important thing you should take your time on. As far as audits, if you have a dramatic increase in income or a dramatic decrease in income, let's say you go from, $10,000 one year to, $100,000 the next year, that could trigger you being audited. But it's your gross income. It's not your expenses. Some of you on here, you may just be in this just to make a couple extra $100. Now you realize that you're not only making a couple extra $100, but you are saving $400 to $700 a month. Our gross income last year was $850,000. We will be lucky. I'm not even going to say lucky. We might have to pay taxes this year. We might. We've never paid taxes in 18 years. Okay. Because we have massive tax deductions to go along the way. But these people I talked to earlier today, they made $222,000 a year as a W-2 employee, and they paid in $40,000 in taxes. What's the difference? I can make more money. I'm going to bring home more money. And at the end, they are being eaten away in taxes. The next person that you come along, it might be your family, it might be your friend. 2 weeks ago, 3 weeks ago, they didn't have an extra, half of them didn't have an extra $400 to their name. Where are they at today? Where are they going to be at a month from now if you don't share with them this opportunity and help them change their life? So with that, I think that's it.